24th of November. It's Thanksgiving week, so a big session ahead in the US. The proper final session of the week, really. Although markets are only officially closed tomorrow for Thanksgiving, the 25th. Friday will be very, very muted, half-day close, lots of volume will be missing, and the Americans, particularly, Canadians are open, but the Americans particularly have a long weekend this weekend. And in fact, many American families celebrate Thanksgiving more than they celebrate Christmas or New Year. But anyway, lots of data today. Top of the shop is going to be in about an hour and a half's time. The PCE data. Remember, PCE is the key data that the Fed are using to measure their gauge of prices rising. So inflation measure, not CPI, not RPI. It's their PCE measure. So that's coming out in about 90 minutes' time. In a few minutes' time, 5 minutes' time, we got the durable goods orders. We got the weekly claims, which is continuing to trend lower. The continuing claims also trending low. So down to sort of not necessarily quite pre-pandemic lows, but 250,000, 260,000. It's around about a normal cyclical sort of economic cycle level, and that's sort of where we are with the weekly claims. So that issue with unemployment and jobs seems to be improving as well for the Fed. So their mantra about temporary inflation, they're sticking to it at the moment. They haven't budged particularly. A bit more of a hawkish tilt. Obviously, this week and this month, we've had, this week, I should say, we've had the confirmation that Jay Powell will remain for a second term as leader of the Fed. And probably more importantly, Lael Brainard will be has been nominated as vice chair, or one of the vice chairs. There's 3 vice chairs normally. There's only been 2 in the current setup. So that brings a more perhaps hawkish tilt to the Fed itself. So that looks like the way forward into 2022. There's an interesting poll I saw on Reuters yesterday, which is talking about perhaps bringing forward expectations of a rate hike into May now. There's a 63% chance of the first rate hike taking place as early as May 2022, and it's virtually nailed on that there'll be 3 probably 0.25 basis point or 25 basis points, 0.251% rate hikes during 2022 in the United States. So again, obviously see how it all pans out. PCE is the big data for me in about 90 minutes time. Also, we've got durable goods. Durable goods, remember, are those goods that are durable, so they hang around. Electronics, aeroplanes, that sort of thing, sit in the durable goods sector. So that's expected. Headlines are expected to move up, but the core number is expected to remain a bit flat. So don't get too carried away by the core. Obviously, hello, my friend. Again, usually with these sessions, guys, if you want anything to talk about particular charts, we'll bring the charts up in a minute. I'll get rid of my ugly mug, and we'll have a look at those as well. Claims is we've been following quite significantly over the last obviously 18 months of the pandemic. The continuing claims, that sticky one, which was the long-term unemployed, remained very, very high for a long time. It didn't come down. And obviously, the other key number today is this second reading of third quarter GDP, expected to show an increase of 5.7%. But the key one, the quarterly one, 2.2% from 2% last time. So lots of data to digest at the moment. As I say, really the one I'm looking at is that PCE number later on today, the one at 1500 server time, 1500 GMT, 1700 server time. So let's have a look on how that comes out in a minute. So as I say, usual with this setup, if there's any particular assets you want to have a look at, let me know. Stick it in the box and we'll have a look at it. At the moment, I've got here. There I am. I've got, this is dollar yen on the 1 hour time frame. Dollar yen, if we go to the monthly time frame, you can see we're at not levels seen since the beginning of the Trump era. We're up here at 115.20 at the moment, 115.18 for dollar yen. This is the monthly chart for dollar yen. You see, we go all the way back to January. This was November as Trump was elected president, 2016. December finished very high. We closed the year out on 2016 at 116 at 116.85, and then we came down in January. But I say we haven't been up here since that December, January 2017 high. So multi-high year highs here for dollar yen, and that's the case for most of the dollar bid. Obviously, this week we had a big rally in the dollar this week. This is the 1 hour on the dollar index. I got the daily, excuse me. I've left my water somewhere. It's not here. Never mind. Big rally in the dollar index this week, and it's over some key levels we were talking about in our Bloomberg video. I don't know if anybody's been watching our Bloomberg videos that we do every month, but in our October Bloomberg video, we talked about some key levels. The third target we talked about was the 96.50 level, which we've breached very significantly. Andre, good afternoon, sir. Hope you're well. Hope you're staying safe and your family as well. Anything, obviously, don't need to. Need to show you charts, my friend. But anything you want to talk or discuss about, please let me know. We'll have a look at it live. I'm not. Obviously, have a look at that. So, dollar index on the day, very strong. November. It got its leg up this week on the back of the uncertainty. Really, remember markets. The one thing that markets really hate is uncertainty. It's the uncertainty about who was going to be the next Fed chair. Was Jay Powell going to get a second term, which is fairly typical. They normally do. But there's lots of rumours swirling. Remember, Elizabeth Warren wasn't going to vote for him, or still won't vote for him. And Brainard was up for potentially getting the top job, but she's been put forward as vice chair. So that uncertainty's gone away now. And so it's going to be more of the same, basically. So the arguments on both sides of the camp remain. One saying that the Fed is behind the curve and they're going to have to react too quickly, too aggressively as this problem with inflation sticks around. It gets broader and wider. It's in some, can be very sticky inflation. The story of the 1970s, stagflation, low growth, high unemployment, very high inflation. It isn't quite like that now because obviously the unemployment rate has come down quite significantly and growth is quite strong. So, I'd argue that's not the case. But the argument about inflation hanging around longer than perhaps the Fed and other central bankers are expected might be the case. So, again, only time will tell. But at the moment, dollar is very much on the bid. And I didn't not really see anything. You can see here on that chart there's nothing really interrupting that strong breakout since this big candle here on the in the middle of second week of November when we broke out of that range there over that 94.50 level. Big strong day there on the 10th of November, and hasn't looked back since. It's just rallied up and that's filtered out. And there's been some very heavy moves for some of the emerging market currencies as well. Obviously, everybody's been talking about the lira, the Turkish lira over the last few days. All-time highs over 13.23 as the President Erdogan insists on not increasing rates and defending the position of his central bank, but I'll tell you the central bank what to do, basically. But currency markets think otherwise. A big run on the Turkish lira this year. Huge run on the Turkish lira. Raz, good afternoon. Anything you want to talk about, my friend? Let me know. Why can't I share that? Why isn't that working? And that one, hide, real. Amen. Hello, Indonesia. Good afternoon. Good evening to you, sir. Hope you're well, staying safe. Anything you want to talk about, my friend? Let me know. We'll have a look at it. So let's have a look at the data. It should be out now. It's 5 minutes after the date. So let's just have a quick run through this data. At the moment, this is the dollar index. You can see on the daily time frame, it's continuing to push higher. Obviously, it's been dollar positive, this data. So let's have a look at the data that's just dumped out of America. Lots and lots and lots of data today. So let's start with it as I read it through here on my terminal here. So continuing claims, that's not the initial claim. So let's go to the headline. Headline, continuing claims went under 200,000. That's very positive. So 199,000. It was expected, to come in at 260,000. It's coming at 199,000, under that big psychological 200,000 level. So that's a very positive number. It's perhaps the feeding through of people taking jobs up after the supply checks start to stop and people taking these jobs up. Obviously, it's also we're into the season of hiring for the Christmas rush. So lots and lots of vacancies and lots of companies and retailers in particular, delivery companies. But certainly initial claims much better than expected at 200,000. That's a big positive for the dollar, big positive potentially for the US economy. Continuing claims, unfortunately, were worse than expected. They've come in at 2.049 million. So that's a sticking point. But that means it's still trending lower. And the 4-weekly average is down 20,000. Again at 252,000. So overall, the jobs numbers this week are to the positive side, going quite significantly in that weekly number. So you might expect to see that over the next few weeks, this claims number coming down quite significantly, just because of the season that we're in. It obviously may tweak again in January, but at the moment, lots of hires and getting placed for the summer delivery. GDP missed, came in at 2.1% versus 2.2%. So again, you could argue perhaps another indicator of that perhaps it's not growing as quickly as perhaps anticipated. But having said that, a 2.2% increase for the quarter over the first reading is still quite a significant hike. So 0.1 is still it's in the positive area. It was 0.2 on the initial read. So that's relatively good. The headline annualized number, therefore, has beat, though. That's coming at 5.9%, so another better than expected figure. Wholesale inventories quite significantly worse than expected, but again, that's another sign of the bottlenecks in the supply chain. So GDP annualized is coming at 5.9%. The initial weekly claims is coming at 199,000, much better than expected of the 260,000. That's again, overall, GDP better than expected. So good numbers there. Durable goods, bit of a miss for the headline. It's coming at minus 0.5 of 1% compared to a gain of 0.2 of 1%. So again, this could be an example of the supply chain bottlenecks issues and inventory stores and wholesales, because the previous month durable goods order as well has also been revised down to minus 0.4 of 1%. It was expected to rise quite significantly, the headline, but it hasn't. It's slipped. The non-defense capital goods ones is in line at 0.6 of 1%. So overall, that's a dollar positive. And you can see that here on the dollar index here, we're at 96.86. So dollars up. Euro one would expect to be down. So here, Euro continues to decline here under 112 at 111.92, continue to trend lower as it has done all day. So lots of data there, guys. As I say, the main data for me is that PCE data coming up in another 90 minutes. But that batch of data we just had now remains dollar positive, my friends. So let's have a look. Who's asking for some trades? So Oliver French is asking for what's going on with cable. Cable, like other dollar crosses, has been under pressure. There's political pressure mounting in the UK, although the UK isn't getting caught up in the COVID situation that many other of the European countries are. It's doing relatively well there, but you can see this is the hourly chart on cable. O'Dane, I don't know what time frame you're interested in, but it's been declining most of November. So this is from Friday. We went down. We were up here at 135 last week, and we're here now down at 133.45. So here we're in the bottom half of the Bollinger Band. See these on this 1 hour time frame. See how that's a classic little squeeze there. Can you see the squeeze in the Bollinger Band there we had earlier this morning or earlier today? As the top band comes in, see how the bottom top band comes in, the bottom band comes up. So we had that squeeze as we moved lower here at 10 o'clock this morning, and we went lower again at 10 o'clock, 11 o'clock, I should say, when that candle closed, and continued to trail lower, retraced here to the midpoint, and then went lower again. So that's it. When we get this sort of contraction, we can get an expansion as well, because that's what, see how it's done it there, did it there, it's done it really there quite nicely, it's done there quite nicely, it's come down, but as you can see, the trend remains lower in the under half, the lower half of the Bollinger Band. We were briefly over it a bit earlier yesterday. Let's just put in the period so we can see. So cable continuing to decline, 133.45, and that's trending lower. Obviously, if you want to know where it may be going lower from here, so if you zoom out, you can see that's lower. So here on the 1 hour chart, you see we're at a lot of lows. So let's go up a time frame and see where our next support might be. Well, we've just breached that 4 hour low here from the 11th all the way back on the 11th, which was sitting around here at 133.55. So we're under that at the moment. So again, the 4 hour remains low. So let's go up another one. Daily, where's our daily? Well, again, it's trending lower. So and our weekly's lower. So there we are. There were some key levels there all of a sudden. So this is the weekly chart, remember, and we're only in day 3, Wednesday. So at the moment, we're under a key. This is the 200 weekly moving average, and we're under that. So that's a key resistance level. So if we close the week under this 133.88, that's a very weak sign. It's a weak sign for cable. So watch that for the end of the week. Obviously, that's a resistance area for the rest of the week. And remember, America is closed tomorrow for Thanksgiving. There's much lower volumes on Friday. So watch that on that's your key level on your, that's that weekly level. You can see there. So 133.80 is our resistance for cable traders. And we've been under that for all of today, basically. So it's a key level. And you can see that here on the intraday basis. That's our 50-hour moving average as well, is around about that 133. So 133.8 is our key resistance to the upside. But at the moment, it's trending and moving lower. And that will be a key break on that weekly. If that goes here, we close under here significantly this week. That could continue to track lower. So watch that one. To the downside. Hussein, good afternoon. Hope you're well, my friend. Staying safe. Where are you? In Somalia? Take care, my friend. Hope to see you one day. Anything we want to talk about? With it's going on with currency, if index rises, I don't understand, Ade. What is going on with currency if dollar index rises? It suggests, let's go back to dollar index, Ade. It's suggesting that, people want, they're buying dollars rather than anything else. So remember the dollar index. What this shows, this is it's an index. So it's like with the S&P 500 or the Dow Jones index. It's made up of composite parts. So the S&P 500 has 500 companies in it that create their own individual stocks, and they create an average of the 500 companies. They're all have different weightings and different size companies. With the dollar index, it consisted of 6 currency pairs. Most important of the 6 is the euro dollar, and that accounts for about 55%, I think, of the pricing of the dollar index. So the currencies in there, things like the CAD, the yen, the Swedish crown is in there as well. So 6 currencies pairs against the dollar create this dollar index. So when it's going up, obviously that means people prefer the dollar to these other currencies. So dollars moved up here quite significantly, as you saw this week, very, very significantly on the daily time frame. So it's really big. And the next key target level was 96.50. We're quite significantly over that at the moment. So continues to move. That's what that means, Ade. The dollar index is going up, means people are buying the dollar, and it's relatively strong. Andre, dollar hurting the rand. Absolutely, rand. It's the strength of the dollar, really, rather than the weakness in any of the apart from the obviously the Turkish lira, the president there to talk that down. But the ruble is up. Dollar ruble was up yesterday. It's come back down today because of the movement back down, up in the oil price, the peso. A lot of the emerging market currencies are suffering because of the strength of the dollar, and particularly the Asian market, the Asian emerging markets as well. So a strong dollar, as Andres said there, very much does pressure the emerging market currencies. That with less robust and strong economies, add the situation over COVID and vaccination levels and all that sort of stuff, and it can become quite significant. So dollar rand certainly, like the emerging market currencies, it was over. I think it was on its way to 16, wasn't it, at one point? Dollar rand. 15. This is dollar rand on the daily basis, and this just shows you the point. It doesn't look much different to that dollar index rally, does it? On the daily basis, this is dollar rand on the daily, but we're way over a key psychological area around 15, and we're on our way to 16. So that's certainly a strong dollar, weak rand. I'm afraid, Andre, you're absolutely right. But if you're only spending rand in South Africa, it's okay. It's only when you start to exchange it, obviously, isn't it? Okay. Laro, hello, my friend. And Brandon killed it again. Brandon, very good. Are you long? Are you short? What are you doing, Brandon? How have you killed it again, my friend? Tell me. Talk to me. We're here to help. Off. You don't need any help. That's also good as well. So it's. Perhaps you mean by the data? Yeah, it's strong US data that. As I say, in my humble opinion, for what it's worth, really it's the PCE data that the central banks will be looking at, and if that misses later on, I don't know if I'm going to be able to talk for an hour and a half to then. But I don't think you want to hear me talk for an hour and a half till then. We'll see if it's hotter than expected. That's what we're looking at. So let me just give you a bit of a heads up of what's the key number. So core PCE expenditure data is expected to be 0.4 of 1% from 0.2 of 1%. The headline number is 4.6 from 4.2. Where's the other one gone? It's gone. I forgot we got Michigan as well today, and new home sales. That was a lot. Yeah, they've crammed a lot in today. I forgot about the Michigan consumer sentiment as well. See how that comes as well. But yes, lots and lots of data still to come. So yeah, watch that PCE number later on. New home sales and Michigan consumer sentiment as well. New home sales about 800,000. It's very, very strong again. That adds to the Bears or the Hawks talk of inflation being hot. If new home sales, these asset bubbles, whether it's equity markets or homes, 800,000 new homes being sold in a month in the United States is much higher than normal, than the relative normal economic cycle. It's normally around 600,000, 500, 600,000. Anything over 550,000 was positive. Here we are at 800,000. So is it an argument of the pandemic, people moving out of the cities, buying, bigger homes in the suburbs, in different cities? Who knows? But that trend has been going on most of the pandemic, and it continues to hold up. 800,000 new homes are expected later on today. So see again how all that pans out. It's strong dollar day, basically, and that's been going on for a while, as we saw against the majors. Other key things that have really moved the market, been really volatile. I don't know how many oil traders are in here, but oil's been a really, really good one to trade recently. We've had this big rally. It's the daily on the US oil number here. We went over 83, didn't we? We struggled to get over 83, but strong rally, even from beginning to the end of the summer here all the way down to 62. But we've rolled over quite aggressively as well. This is all to do in the last few days. Trend, we gave up 82, we gave up 80, and it was all to do on the expectation that as it started with a bit of a whisper, it came a bit of it rallied very high. The noise that the United States was going to release some of its strategic reserve of its oil reserves to cool gasoline prices in particular. Biden trying to be very consumer friendly. But you can't really fight the market, and the markets are quite disappointed. So the anticipation of the cut is what we've seen over the last week or so. So we've come down from $80 a barrel all the way down to test under $74 a barrel. Let me just take that up into the lower time frame, the 4-hour time frame. So we come down to this $83 here, in the middle of November, all the way down to this $74 level earlier this week when it was finally announced, and yesterday when it was finally announced. So again, the anticipation put the pressure down. The actual news was reacted positively. So sold the rumor, bought the news, and we've rallied here quite significantly from this 74 base all the way to set over 78. We've rolled over a wee bit today at 77.62. So oil is back up, remains relatively big. This is the daily time frame. Overall for the overall for the year, but about quite a big shakeout. So for oil to move back up, really, it needs to start to get back to this $80 level, $80 level. So still $3 away, $2.50 away from a potentially restarting its bull run here in the oil market. So oil's been a really good trade. Obviously, closely related to that is the Canadian dollar as well, which I can't find down here, but nobody's actually going to have a look at it, but that's what's going on. And then the other key commodity that everybody likes to happen, and Pete's just asked that show, just about to bring up gold. What's happening with gold? Well, it's rolled over. The reason gold is under pressure, Peter, is that there's my gold chart, is that the US government treasury yields have had a strong week so far, strong couple of weeks as well. So we've been trending lower here for a while. Let's just go back to the daily time frame. So we rallied. We had that big sell-off on here on Monday where we collapsed significantly. We had a big, huge $50-$60 move down. We went from 1846 as we opened the trading week on Monday. And all the way closing on Monday, just above the 200-day moving average at just above 1800. But huge down candle followed through yesterday, and we're followed through and broken today. So significantly, yesterday we broke the 200-day moving average, having broke the 20-day moving average and gone short on this trading strategy here quite significantly on. Let's bring it up there. On Monday, let's bring that up. That would have triggered short. Let's move that down. I'm not sure what's on this chart. We've got stocks, we've got stochastics in the overbought area. MACD sort of rolling over as well, but significant short position on that big. I mean, had a nice uptrend, consolidated. First weakness broken out of that line there on Friday, and big sell-off on Monday. And down we go again. So next support is this 50. I'm not sure where that Fibonacci level comes from there, that 50 level there. But that sits around 1775 is our next support. We currently trade at 1785. So let me just zoom in where that's a Fib level from there. So let me take some of these off now. Let's tidy this up. Delete. So, I think this is from before, wasn't it? So it's my Fib levels. So let's have a look there. So clearly, some Fib levels already in play. So that's our last big leg up there from a Fibonacci level is concerned. And look what happened on Monday. I'm not just making this up, guys. But see how the 61.8, that key Fibonacci level, proved the actual support just above the key 200 days. So that would have been a big support zone. Nobody was expecting it to collapse like it did on Monday, but it did. It doesn't really matter what you expect. This is what happens. Your Fibonacci would have already been in here, and there's probably been some buyers here intraday and some buyers here intraday. But once that 50 broke, we then finally finished at 61.8. We broke the 200-day on Tuesday yesterday, and that is, you could argue that it could easily, test all the way down to this last leg here, which takes us back to the November low even before November's out on Wednesday. So that's been a big up and a big down for November. See where it finishes, but it's trending lower and moving lower. Peter, I don't know what time frame you're trading gold, but clearly the daily is short. The 4 hour is short as well. There we go. Zoom that in a bit. 4 hour. There we go. So 4 hours clearly short using the same setup here. See that congestion up at the top here. A break of the 20 period and those crossing moving averages here on whatever that was, the 19th. That was Friday, wasn't it? So you would have got, if you've been brave enough to leave that short on over the weekend, you would have caught that rally, that down move here on Monday morning. I mean, if you come in on Monday morning, you could see that was down, and then the big move was there. Yes, so you could have added to your short here on Monday morning, but certainly its big old move was there middle of the day on Monday, and it's followed through here. This 1 hour, no, it's 4 hour traders. Bit of a stall here at 1793. That was at previous support level, and it's broken lower. 1 hour, that's just been trending lower since Friday break there. So again, see it more emphasized there. So lower, bounced off that key 1782 on the intraday 1 hour time frame yesterday. Rallied a tad this morning, but it was weak. Couldn't get over that 1795 level, and it's rolled over again. Strong anticipation of the perhaps US data today, and that's then just gone short again earlier today at 1 o'clock ahead of the US data, and that's moving that out, it's tracking that down. So here, intraday gold needs to break below yesterday's low, which was actually, let's have a look at that, which was actually around there at 1781.62. But remember, as I say, I said a few times already, it's Thanksgiving week, so volumes and liquidity potentially dry up tomorrow. So, but yeah, gold. What's happening with gold? It's moving lower at the moment, Peter, and all those time frames you just looked at. RNX is asking about the euro and pound. Euro will be weak. It continues to be weak. So I'm finding a bit of a support potentially, but again, another one. Again, it's the dollar. These two pairs, RDX. It's obviously the dollar strength that's causing these two pairs to move to the downside. So if we got the daily time frame for euro, it's been short for a while, hasn't it? It hasn't really a bit of surprise. The big move down was here again on the 10th of November, breaking out of this support level, which we'd established the low here from October, which is around this 115.25 level, which had held. Looked like we were going to have quite a good, strong end to October, sort of rallied from that level, but then it sold off very aggressively on that final day of October, and then we've been moving lower ever since, and as we broke out of that channel. So the daily remains very short. It needs to, even the 5 period moving average sits there at 112.56, so you need to be above that before the end of the week, which that's looking going to find some sort of support. 113 is where the 9 period EMA sits, and the midpoint of the Bollinger Band, the 20-day simple moving average, sits all the way up there at 114.50, so a long way away. Here on the daily time frame of the euro, the stochastics remains in oversold area, and the flattening signal line on the MACD might suggest, well, it's perhaps running out of steam to the downside, but that could easily, tink another leg lower. The histogram bars could move lower. RSI, 7 RSI, not 14, but that's in the oversold area. But again, it's still, as you can see, although it's in the oversold area, this oscillator, the RSI, it's still angling. That trend line, if you drew that there, is still moving lower, isn't it? So that remains to the downside, euro on the daily. So therefore, any trades on the 4 hour to go with the trend should be short. And you can see that's very, very clearly short. 4 hour and the 1 hour remains short as well. Anything that moved up but couldn't get out top of the bottom, moved down, and then we saw that here. We've got another little pinch here earlier today on the 1 hour there. We talked about that earlier on the Bollinger Bands, but here all day we've been in the lower half of the Bollinger Band, haven't we? Euro dollar. So moving lower, spike low. See the spike lower there on the data. A bit of intraday support, perhaps. But our intraday low, if you're going to be trading this into the US session, is down there at 111.92. So 112, big psychological number, has been spiked through today. Let me just put that on there, the actual round 112 number. Let's put it on here. So euro moving lower. Make a big thick line, shall we? Let's put it on here. 112. 112 spiked through on the weakness of the data. New candle just starting now, the 4 o'clock candle, but that's still trending lower, isn't it? So 111.92 is our low so far today, and it continues to unwind to the downside. Pound, very much similar setup due to the strength of the dollar, Peter. RDX. Where's pound gone? Pound, there it is, pound. This is the weekly, so let's go down to the daily. Again, it's been another one that's been weak for all of November. The blue line is the 50-day moving average. The golden line is the more important 200-day moving average. And the midline, this white line here, is the midline of the Bollinger Bands. The 20-day moving average is all the way up there at 135. So you'd like to see a break over 135 for cable if it's going to move back up. It's trended lower in the first half of November, bounced up to this key psychological level, and then last week we've been lower again. The stronger dollar, how long it's going to go on for, nobody can really tell, obviously, but 133, I don't know why that's actually in there. Let's just different time frame, weekly. Why is that line in there? That's right. That's right. What we said earlier, wasn't it? 133.80 was that 200 period moving average on the weekly time frame. So we're under that as well. So that is I forgot to say on this before tonight. So that's quite a key level. I should probably change the colour of that. I'll check this. Let's make sure of that one. Okay. Call it 200 week moving A. At where is it? 133.80. Let's just run 33.80 and make it a round number. That's a key number though. 133.80. So sterling really needs to break over that if it's going to show some sort of. Let me make it a dotted line rather than straight line. There we are. So that's the blue line there. Is that 200? Week moving average. So that's weak. No question about that. A new low for November today, and continuing to track lower. If that, as we said earlier, RDX, if this closes significantly below where it is now, this 133.80 level, there's a lot of fresh air under there. So there's, and that was, remember, this is the weekly time frame. And that's just tracked up really nicely, on a weekly basis. This is back in August 2020. Now, last year into the end of the year, then it moved up and then moving sort of sideways. It's tracking lower now, isn't it? So it could easily continue to decline. So 135 and 133.80, two key levels for sterling cable pair. And the lower time frames just move lower. Intraday stuff, I don't know. Again, same. So even on the 5-minute chart here with this setup, it's still biased lower, isn't it? Even down here at the 5-minute time frame, struggling to get over its 50 period moving average today, isn't it? Lower. Again, that's the 200, the 50, and the 20. Great example of, it doesn't matter what the asset is. Doesn't matter what the time frame is. The technical indicators still tell you the same story. And even on the 5-minute here, it's sort of weak. Obviously, in the shorter time frame, we've been as low as, what did we say it was? 133.39. So That's been our low today. It seems to be a bit of support around there, 133.46, 45, something like that. So, but even here, I say it down, it's 5 minutes, it remains to the short side. So there we go. Any more questions? Anyway, it's not many viewing today. We didn't schedule this, so if you're around, you're around. If you're not around, obviously you're not here. I understand that. Let me just, I can't get on Facebook here. Can I? YouTube. What's that? It's your Facebook post. Let me just check YouTube. I see. That channel. There's nobody over on YouTube, I was saying. No. Okay. No. Okay, let's get rid of that. Okay, so RDX, no problem, my friend. Again, it all depends on your. I said this a lot yesterday, and Andrea, I'm sure, has repeated it in her webinar today. A lot of your trading strategies and approaches need, obviously, you need a strategy, you need an approach, you need to understand the basics and some certain pattern setups and cable setup, candlestick setups and things. But whether you're trading as a trend follower, as a mean reversing trader, whether you're using technical indicators or just pure price action, you've got to have a strategy. You've got to have an approach. You've got to be disciplined. You've got to be patient. All those key boring words, and accept your winning trades as easily as you accept your losing trades, and that's a technique in itself. So the game of trading, or the business of trading, is very much a mindset business, and that's what lots of professional full-time traders concentrate on day in, day out. They keep their losses small, they keep their volume small when things aren't going well. When things are going well, they don't get too carried away, they don't get overexcited, and they don't get too depressed when they're losing. It's just part of what the nature of doing business, like any business, is. But trading can be even more emotional because it's directly, your capital, your money is directly involved sometimes. But if you're worried about the amount of money you're potentially losing on a trade, your stop loss is probably too far away. Your volume, your risk is too large usually, and that's most of the reason people end up failing, is they risk too much and they worry about they're losing trades too much. They don't accept that it'll happen, and it'll happen a lot. And you just got to, put it to bed and get up, dust yourself off, and start again. And that's what happens. RDX, there we go. Very good example. Many losses in my accounts this week. That losing RDX and everybody, it is just part of the business. What you need, what you shouldn't do, is get too depressed about and down about it because you've lost money. And it happens. It happens to all of us. And it's the nature of what we do, isn't it? We always lose money, whether it's trading or whatever it is, selling a car or selling a house. It just happens. From a trading point of view, though, what you want to do is understand what's happened. So analyze everything. Why did it go wrong? Was it I was risking too much? Did I make a mistake with my system? Did I follow my strategy? Have I got a strategy? Have I got a trading plan? All those basic questions, guys. You should. And Andre here, a guy that's been trading for many, many years. Rather a few smaller trades than one big trade. Yeah, but rather than one big, blow it all, get it all back. And I see that many, many times. People will have a string of losing trades and think it's the end of the world. Well, it isn't. It's just what happens in the market. But what you want to do, RDX and others, is sort of analyze each and every trade to understand what's gone wrong or why it's gone wrong. If you can't, it doesn't matter. Don't worry about it. Don't get too hung up about it. But remember, because the other thing about this business is longevity, because markets have, they haven't changed and they do change. And I know that sounds a bit of an oxymoron, but, markets are driven by people. People, we are emotional beasts. It's the way, God's made us, whatever you believe, whatever your God is. And it's just the way we are. We get excited when we're winning, we get down when we're losing. So you're just going to bring that from your subconscious to your front of your head, and just manage it, deal with it, write stuff down. I'm here to help. All of my colleagues here are here to help as well. And it's not, training isn't for everybody. If you're too emotional, you're too indisciplined, you've got no patience, you're going to find it very difficult, because you're fighting your own personality. But we can all change, we can all adapt, and we can all grow. Don't just get sucked in by the big winners. Everybody has losing trades. Understand the losing trades as much as you understand the winning trade. Don't believe everything you see on the internet. The internet is full of nefarious types. But understand yourself first and foremost. I use, I haven't got one here, but I use this, and I talk about this all the time. About look in the mirror first. You've got to understand what makes you tick first. There's no point trying to trade this 5-minute chart here if you can't understand that all of a sudden this could suddenly turn around. Actually, let's go down to the 1-minute chart so we see a bit more action. Suddenly, look, here it looked like it was going up, didn't it? And all of a sudden it rolled over. But again, a technical, it's a lovely little tweezer top there on the 1-minute chart at the 200 period moving average. Did it then? There, that classic. That's easy trade down there. Get out when it goes white again or something. So it's simple as that. If you trade 1 minute, there we go. Done exactly the same thing, but again, buys to the downside. And here we are, right on the 1-minute chart, just looking at the candle patterns. The same setup we just looked at for the daily and the weekly. And so it doesn't really matter. Follow the rules. So again, this one you might go long there and ran it to there. Tweezer top, resistance at the 200 period. That's enough to certainly take your long trade off and look to go short. Whether you waited till it went under the 20 at the midpoint of the Bollinger Band, waited for that minute and got short there because you're under the 50 as well. That's a nice little short. All the way, it's gone all the way down. It's turned from red to white. That might be enough for you to get out. You've had enough pips on for that move down. But the trend is very much to the downside. Parabolic SAR still negative there. We talked about parabolic SAR yesterday, didn't we? Still negative, flipped, moving lower. Where's our next support? Well, it's on the 1-minute chart, isn't it? Our new daily low now is at 133. Can't read that, 133.32. So it's still moving lower, euro. So everybody see it's still here. I don't know how many of you are still in here, but yeah, it is really finding something that works for you. If you've got the time, to trade, you've got a few hours to trade. Now's a good time to be trading. It's 15 minutes before the US Open. We've had a whole host of data has now been absorbed and it's out. So if we go back to let's say the 30-minute time frame, so the anticipation today has been to the downside, and that's just been followed through, hasn't it? As the actual data came out here at 3:30, so it went up a wee bit, but we've gone down again. So it's dollar positive days so far, and trade what you see, not what you think. Keep your losses small, as Andre said here. I didn't leave it up enough. Rather a few small trades. The beauty of what Andre has written here as well is, you'll get a lot more experience doing 5 or 6 small trades for the same value as one big trade, because you've bought or sold 5 or 6 times. You've gone through the process of trading, and that, my friends, is really what this. Let me just put I'm going to have a bit of a rant on now. That, my friends, is very much what trading is about. It's about process. It's not about looking at those charts and the indicators and listening to somebody like me prattle on all the time, or understanding technical indicators or economic theory. A lot of it is the process of trading, the process of placing trades, managing your trades, stop loss targets, getting in, getting out, accepting it. That's really is what the majority of trades about there. I don't want to stand myself to all day. What am I doing? I want to bring that up and get me back. What am I doing? There we are. So yeah, absolutely. RDX, I agree. Very good. Okay. Yeah. I mean, there's no the thing about trading as well, guys. There's no right or wrong answer. Remember, a trade only exists because it's a belief pattern. somebody believes that this is going to go up. So at this point here, where are we? Let's go back to the 1 minute. So somebody down here, somebody now believes that this price is going to go up from here. Somebody else believes it's going to go down from here. At the moment, the bias is a bit to the upside because it's, this current minute we're moving up. Oh, man. And that's all brokers do, like Hot Forex. All we do is offer you the platform and bring these belief patterns together. Somebody thinks, oh, it's gone down too far today, it's going to go up, and it has done for the last 3 minutes. But the last 15 minutes has been going down, hasn't it? So it doesn't do it all the time, obviously. But overall, if we go up to like the hourly chart today, it's the bias is still very much to the downside, isn't it? So by buying even at the 1 minute time frame, you're going against the hourly time frame, you're going against the 30-minute time frame, you're going against the 15-minute time frame still, aren't you? Admittedly, 1 minute, there's still 15 candles absorbed in one of these 15-minute candles. But that's very much against the time frame. Even the 5-minute time frame is still biased to the downside. So the 1 minute is the only one that's ticked up, and that's only for the last 3 minutes, hasn't it? So really, again, if you've been short here, you've got out. Would you've got long? I wouldn't have let it got long. I'd look to you need to break that midpoint. The rules would be breaking that midpoint of the Bollinger Band, really. So even on this time frame, if you're scalping on 1 minute time frames, well, that's what it's looking like. But is it going to break it? Remember, these moving averages are just as relevant at this time frame as any other time frame. So it looks okay at the moment. We may be trying to go long again. But we'll see if it holds or if it doesn't hold. But at the moment, where are we? It's 16.16. So is that the 16.16 one? Yeah, 16.16 one. It's still relatively negative. But here on the, you can't see it because of my, if I get rid of that, you might be able to. No, you still can't see it. The MACD sort of turning up. I can't get rid of me, but if I move it to here. No, that's no good, is it? Still can't see it. Let's go back to here. There we are. MACD's turned up, so we tested. There we go. It's a classic example of a rally for 4 minutes. We tested the 20-period moving average, and it sort of rejected it at the moment. First test, spike, close lower. Are we going to go through it? Well, wait till it breaks. Wait till it breaks before we go up. Okay. So I'm going to wrap up. I've been on for nearly an hour and still 40 minutes before the main data comes on. So a quick review of what's gone on today. We've had dollar positive data. We've had the today. That's not right. I've got the wrong calendar. It took me back to the 28th of October then for a minute. I know what that was all about. Things doing things live. So let's run through the data today. So initial claims much better than expected. 199,000. It was expected to come in at 260,000. 260,000 would have been positive, but 199,000 shows that jobs are getting. People are getting jobs. It's the festive season. It's the holiday season. So those jobs are getting gobbled up by the looks of things. I haven't seen the detail in there, but that looks relatively positive. GDP quarterly, so the annualized number was better than expected, so another positive number at 5.9%. The second reading of third quarter GDP came in at 5.9%. That was the price index. The actual GDP at 2.1% rather than 2%, which it was last time, but it was expected to be 2.2%. So although it missed by a tick, that's still an increase over last time, and it's still showing a move forward. Wholesale industry was quite a significant miss, but that's that bottle chain, the bottlenecks within the supply chain, not bottle chains within the supply necks. Story again, but perhaps keep an eye on those wholesale inventories. Quite a slip. Durable goods was more or less in line. The headline minus 0.5% compared to an increase of 0.2%. Remember, it was negative last time, so that's perhaps a bit of a caveat as well. The defence capital goods was better, was more, it was in line as well. So, but really, we're 40 minutes away from the PCE numbers. So if they're hot or they're too hot, we could see the rally in the dollar continue, because it will be the argument will be that the Fed might have to move earlier. Obviously, I haven't mentioned the minutes yet, have I? The other thing later on tonight, the Fed minutes. A lot of it's been sort of priced in, but certainly the Fed minutes tonight will show. The reason I always even watch them, even though sometimes they're not market moving, is because the minutes are actually what was actually said, obviously in the meeting, and therefore minuted, and it goes down as history as what was said. So although individual members of the Fed will come out and have their own speeches and different interviews, and it's clear what they think and where they want to be going with regard to the dot plots and the interest rate decision, the discussions are sometimes where some of the interesting stuff comes out. So Fed minutes later on tonight as well might show the degree of how much discussion was taken place before they settled on the 15 billion taper agreement. There might be some talk or some pressure that 20 was talked about, higher, 20 billion. Others might be just talking about or previously they talked about 10 billion. So whether the 10 billion was actually talked about, or was everybody really keen to move 15 and move the taper forward quicker? Which would mean the tapering ending at the middle of next year. And again, the markets have got a wee bit ahead of themselves with the assumption that the end of tapering means rate rises, that the Fed have been at big pains, and other central banks, that the end of tapering doesn't mean that rate rises are going to start immediately after the end of tapering. Remember, this tapering is taking away the punch bowl, taking away the feeder. So they stop feeding the beast that is the economy. It doesn't necessarily mean they have to start putting a brake on it by putting interest rates up. The other side of the argument is that inflation is stronger, is broader, is more significant, is going to hang around for longer. So therefore, they're going to have to act at some point, and they're going to be under pressure. They're behind the curve, and they're going to have to act much more quickly and aggressively, and therefore causing more pain and grief as costs go up quite significantly. Costs when you put interest rates up. Things like mortgage repayments, rents can go up on the back of that, or your spending can go up as well. Inflation can be curbed if spending gets curbed because of costs of spending going up. But anyway, RDX volume. I'm going to give a volume trade. Volume's obviously very significant, RDX, but it's not on particularly a number of the strategies. Perhaps you should do some volume strategy as well. It's not something I look at particularly, but I know lots of good volume traders. Anna Cooling's one of my favourite people to watch and listen to. She's a big volumist, and she'll sell your books, she'll sell your courses and everything. But yeah, she's a big volume trader. Interesting, you mentioned volume, RDX. The one that did catch my eye, but this is obviously just simply to do, I would argue, to do with obviously in Thanksgiving week, but clearly there's a big resistance at the 4,700 level for the dollar for the indexes. The S&P 500 here, 4,000. There we go, 4,700. So just really can't close over 4,700. So clearly a bit of a channel forming up here, and we're in this channel at the moment. Interestingly, this is a 20-day moving average. Let's zoom this up. And we tested it through it yesterday, but a very interesting day yesterday. Clearly, a spike on Monday. Let's go back to Monday. Spike higher to as high as 4,735. Closed lower on the day. Lots of big range yesterday as well, and closed near where we'd opened. So doji candle yesterday. And a down day today. The 20-day simple moving average sits there at 4,665, and we're right on that now as we speak. This is the futures market, the USA 500.F, and we're right on that now. The bottom of this channel, as we rallied up to test over the 4,700 zone, is down here at 4645 or 4650 for the here on this particular chart. So that's a key level. If that breaks, it could move down quite significantly. Bottom of the Bollinger Band is here. See how the Bollinger Bands again have zoomed in. I can't take that yet. Are starting to. There we are. We're starting to pinch in on the Bollinger Bands there. So remember, pinch, explosion of volatility. So this could be a pinch to the downside. See how the top came down, the bottom didn't pinch in, but there's perhaps some breakout. So we could have quite a volatile December possibly. Are we going to break out from here and move up, or are we, as many have talked about, move back down again? But it seems that the dips have been bought. We're in a particularly positive, typical part of the year. That data today was quite strong. But the tech companies are getting pinched. If interest rates are going to go up, the tech companies, the big drivers of this tech rally, or the rally in the markets, we go up to the weekly. So what a strong rally we've had from the lows of the pandemic crisis. There we got back to these highs here from already September last year, and it's been a really strong run from there. So on this chart, that dip at the moment doesn't look much, does it, on the weekly chart? But we shall see. Certainly, we're struggling to 4,700. Needs to breach it quite significantly, but it was already quite an extended level here on this Fibonacci level, which we'd already got to. So lots of targets were taken out of 4,700. So, to answer your I was just going to insert I was going to insert some volume, wasn't I? Shall I just do it straight on? To answer your question, RDX, sorry, I was rambling on there. Show volumes. Oh, this is that. Okay, so that didn't show what I wanted to show. I might do it there. That's what I was wanting to show you. That RDX on a volume. Obviously, it's weird because it's non-farm pay. It's not non-farm payroll. It's Thanksgiving week. So, but look at the volume that was registered yesterday. That big spiky volume there. This is the volume tick. The green line there on this big down on this sort of indecisive day. So that was either we don't know what it was, but it's lots of either people bagging their profits before the Thanksgiving weekend, or putting positions on. Who knows? Before the Thanksgiving weekend, more likely the other taking profit off the table. Obviously, we had that huge sell of Tesla shares from Elon Musk. So that's another one that's fed through there on Tuesday, and that accounts for probably a lot of that spike. Some key technical levels again remains big to the upside at the moment, but it's consolidated for quite a while. So it's either going to break from here, break 4,020, and off we go running again, or we're going to break down here, test a bit lower again. Big fat support of 4,550. So there we go, guys. So big day today. 30 minutes to the big day, to the most important day of the day. I'm going to go and have a look at that myself now. So is there any final requests about anything? I don't know who's still here, to be honest. I can't see because you're all on Facebook. I can't see from the Facebook questions. But anyway, I'm going to call it a day. So let's just wrap up. So Euro, currently we're trading at 111.94 at the moment. Remember that key 112 level was breached earlier. Yen still at multi-month highs. We're at 115.30 to the upside. So dollar remained bid against the yen. Pound down. There we go. Let's go back to the hour line. 1 minute. 133.78. Remember that 133.80 levels, that 200 weekly moving average, and we're moving lower again. So it's a strong dollar day as the US market opens. Oil is currently back at 77.50 and bounced up. Dollar CAD, we didn't talk about dollar CAD, but we were back under 127, which is interesting. Dollar CAD's getting a lift on the rise in the oil price. Gold continues to decline. We've put in new day lows in this current hour at 1778.50. Continues to track lower, and that's all for now. So trade carefully, trade safely, everyone, and we'll see you again next time. Join Andrew tomorrow. It is Thanksgiving. Obviously, the American market is closed, but there's plenty going on still. Lower volumes. Obviously, just be careful with lower volumes. The volatility can be a bit unnatural when there's not much going on, but still plenty going on for this final week of November. So take care and stay safe, everyone. All the best. Take care. Bye bye.